Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 10% off, you can use code A1T10. Again, that will be a 10% discount off of any of their trials you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back to a Monday live stream. Seems like a Monday theme recently. You get a big gap down in markets, big fear event. And again, that is, I've been saying it, probably the theme for 2025 is a lot of change and uncertainty and market freaking out. Guys, you've got the VIX up just about 20% here this morning, trading around a 20. So when you get a 20 VIX, when you get a higher than 20 VIX, that's where you're starting to see market volatility pick up a little bit. People a little more uncertain about what's going to happen next in the markets. Huge moves pretty much across the board. Let's take a look at some of the indices. So you've got S&P 500 completely trending lower or dropping off a cliff here. You can see this big gap. And we're going to talk about what all this is, the tariff stuff, what this could mean for markets going forward. I'm not going to lie, it poses a serious risk to risk assets in general. What I mean by that is that if you are looking at the stock market, if you're looking at cryptocurrencies, take a look at Bitcoin down 3.4%. Big drop here for Bitcoin. Look at Ethereum, guys. Did you see this? Ethereum on the day was down at 1.24%. We talked about this literally last week, that the idea that cryptocurrency can have those kinds of washout days. I mean, Dogecoin is used to that stuff, but you can have days where Ethereum is down 20 something percent, right? This is what happens to risk assets when a risk off concern flares up in the markets. There's nothing new here. This is day in, day what. This is why people love and hate crypto at the same time. They love it when risk assets are working very well, smooth and easy. They hate it when things are not working easy. Nothing goes up forever without any headaches. And if you find something in the markets that does really well, like for example, over the long term, technology stocks have done really well. But guess which stocks get crushed the hardest when markets freak out? Technology stocks, right? That's not a coincidence. Where there is more risk, there is potentially more reward. And where there is more reward, there's almost certainly more risk, right? That is the way markets work. There's no free lunch in this thing. And when you look at something like, stocks or specifically small cap stocks, you can see there was a big sell-off here. And now they're getting a little bit of a bounce. Like you can see NASDAQ is bouncing here. I'm actually really closely watching NASDAQ today, but you've got this stuff happening, and we got to talk about what's the driver here. What's going on? Well, it's the tariffs, trade wars seemingly being opened up on multiple fronts with China, Mexico, and Canada. And trade wars, stocks hate that. As you can imagine, businesses do not like price instability. It can hurt their bottom dollar. It also can potentially hurt the consumer, right? So when the way, to my knowledge, tariffs work are, let's say this is a country and this is a country, A and B. Country A ships goods to B, and let's say B has tariffs. What B does is they, right off the bat, they take a slice off the top, basically increasing the price. And the idea here, tariffs are not good or bad, quote unquote. They're just tools. So sometimes you're going to hear the politicized dramification of tariffs. Oh, they're good. Oh, they're bad. Tariffs themselves are neither good nor bad. They can be good. They can be bad. They're just a tool. Aggressive tariffs, the market doesn't like it because that incites a lot of change in a short term, and it doesn't give businesses a lot of time to adjust. Now, if we had said, for example, like, oh, tariffs are coming in 6 months, the market would be fine with that because a lot of businesses could make transitions to prepare for that change. But what the market doesn't like, the reason it is selling off, and again, I'm not disputing, we'll see what the long term economic results of tariffs are. Maybe they're good, maybe they're bad, who knows? There's a lot of debate on both sides for that. But the short term for us as traders is pretty resoundingly, obviously not exciting. Markets don't love this, right? You've got stocks clearly lower off of increased tariffs. And again, that's just a snap reaction to look, prices are going to go higher. A really quick example is oil, right? Oil snapped higher here today. Now it's come back a little bit. In fact, this actually brought me very briefly back to break even on my trade. This thing looked like it was dead on Friday, snapped back. And this makes sense, right? Because Canada and the US very quickly over the weekend ramped up a little bit of a trade war, right? Because the US said, oh, we're raising costs on imported goods from Canada. And Canada said, well, we're raising them too on imported goods from the US. And so you've got this little bit of a drama. Well, right away, oil prices jumped because, of course, the US imports a lot of its oil from Canada. So, you've got a lot of forces at play here. I said this over the weekend, and I'll say it again. Tariff headlines, drama. Is TikTok getting banned? There's going to be no shortage of this stuff this year. There's going to be so much drama. It's just inevitable. With Trump, again, whether you like his policies or not, we're not here to debate that, but he is a person that has strong opinions. He's not an incredibly moderate president. So when you get somebody who has strong views, strong opinions, it's going to cause some volatility. So that is to be expected this year. So you've got stocks down here today in response to this as they try and pick up the pieces. Now, again, long term, tariffs could be a good thing. I don't know the answer to that. I'm a trader. I'm not a, enlightened economist, but there are good, like tariffs are not necessarily bad. Tariffs are not good. They're not necessarily bad. They're just tariffs, and they can be good, especially if targeted in the right way to specific sectors, to specific countries. They can be an excellent way to bring back business to America domestically. But there's also the short-term ramifications of higher prices. It is built into the way tariffs work, right? If the government is going to say, okay, imported goods from the EU, which, by the way, Trump also mentioned EU is next, if that gets a price hike or it gets its imported goods from Europe, there's an imported tax to that. Businesses just pass that on to the consumer. That doesn't mean, again, that revenue to the government could be put to good use, and it makes U.S. local businesses more competitive with other places. That's the theory, right? Now, again, theory and actuality, they're difficult to predict. In theory, tariffs could improve domestic production like they did in the 19th century. We were a roaring domestic economy, and tariffs worked wonders. But it's a little bit of a different world than that time, and so we'll see what ends up happening. The point is, the short-term headline that's getting people freaked out is tariffs, tariffs, tariffs. And in my opinion, the big picture is, I personally will stick to what I do. I look at the system, I look at the numbers, I look at the results, what's actually showing up in my radar. Again, we can all sit around here and we can argue Trump's bad because this, or Trump's good because this, and Jerome Powell's going to do that. And we can do that all day long and try and forecast exactly how it's impacting the market. But what I realize, and what I've come to realize over time, is I'm not a genius, and I don't know the future with certainty. And every single one of us in this chat does not either. What can we do then? What we can look at is we can look at the trends that are actually materializing in the data. Now, you might say, well, Nick, that's backwards looking. Well, forwards looking is really hard in markets. Trying to predict how tariffs are going to impact the economy is a game that you can try and play, but you're up against brilliant geniuses who also get it wrong all the time. That's economist 101. Economists are notoriously wrong, right? because it's hard to predict the future. It's not that economists are just stupid. It's that economists are really smart and they still get it wrong. So what can we do as traders? We can look at the data, stay true to the system here that we use day in, day out. The EdgeFinder helps me do that. So what I'm looking at is I'm going to do what I do every day, despite the headlines, despite the noise. Let's do the process. We do this day in, day out for a reason. Look, we go here, we exclude the neutrals, and we say, what readings, we exclude the neutrals, and we say, what readings are we getting today? Do we have any setups that look good today? S&P 500, bullish, Dow Jones, bullish, NASDAQ, bullish. What the heck, Nick? You're talking about bullish setups on a day where tariffs are everywhere and trade war is starting? Yeah, I am, because that's what my system tells me. I don't stray from my system. The system is what has brought me to profitability over the years. I'm going to stick to what works for me. Bitcoin bullish setups, it's a little bit lower score, so I'm gonna focus a little higher on the list here. We're gonna take a look at the S&P, the Dow, and the Nasdaq, and we've got some big dips happening here today. So I'm going to watch these and see if we can get some setups. I really like the NASDAQ. In fact, where it currently trades, I don't mind it at all for a possible long trade, just because I think there's some big fear coming into this market. You got the VIX up to 17. Let's see. I mean, if NAS sets up for us today, that might be a trade setup for me. We've got a key level of support. We've got an overall upward trend. Yeah, we're consolidating. And maybe you could be more patient than I am. Maybe you could say, well, I'm going to look for a breakout through the highs before I get any sort of confirmation on the NAS. Maybe I'm going to sit tight. Maybe I'm going to wait on the sidelines. You do you. I don't, I'm not I'm not your dad. At the end of the day, I like the NASDAQ on a pullback. And if I get that set up, I'm going to probably take that trade. So I like the NASDAQ. I'm going to watch it. Dow Jones down 1.1%, tested those highs and gave back some gains. Dow Jones has a +8 on my system, so that is a bullish reading. I'm going to look for setups on that one, but it's a little far away from an entry point for me. I was looking at a breakout through those all-time highs and buying the pullback on that. COT data, guys, came out real strong. You'll notice here that we got a +2 on the NASDAQ for COT data. Let's inspect that a little bit closer on our screener. If we go COT data, and we pull this open and we take a look at the NASDAQ. What have you got here? You've got NASDAQ overall increased long positions pretty aggressively, and the overall percentage for longs is almost at 61%. So clearly big money seems to favor the NAS. So I like the NAS too, just kind of following suit there. I'm looking for dips on it. That's probably a setup for me this morning if I can get it. I'll watch that close, but there's likely, like I said, to be increased volatility. You got the VIX at 15 here, up 15% now, actually selling off here a little bit. Let's see if that can continue lower. That would be good for risk assets. You got Bitcoin all over the place. I'm out of Bitcoin. I'm also out of my S&P trade, looking for setups if I can get them. But Bitcoin here, big kind of sell off over the weekend. Like I mentioned earlier, Ethereum was down 24 something percent over the weekend. Just crazy to see that. But anyways, yeah, just going to keep an eye here. S&P 500 looking interesting as well, pulling back into this area. But again, indices, especially the NASDAQ, seem to have gotten some pretty aggressive buying going on last week. If that continues, that could actually be a nice kind of put on the NASDAQ, if you will, a nice little protective downside risk kind of thing. We'll see. NASDAQ is very volatile with the rest of them here. Also getting some readings, Euro, USD, Aussie dollar, bearish, getting plenty of setups this week, and I am very likely to be taking plenty of trades as well. EdgeFinder is currently 30% off right now. If you have not taken advantage of the discount that we are offering, you can find out more information by sending a direct message to us on our website, a1trading.com. We've got reps standing by who can hook you up with a copy for a discount. And I've got two special kind of announcements that I want to make with this EdgeFinder. Last week, we made mention of inclusive pricing that we offer for people who are in places where the US dollar is very expensive. We are going to make that a continued offer, just so you guys know. If you are somebody in a place, I'm thinking places like South Africa or India or Australia, even places where the US dollar has been very, very strong and costly, we still want your business. We still want you to use our tools. And we know that the cost of the EdgeFinder went up due to the rise in the value of the US dollar. So if you are interested in taking advantage of the EdgeFinder sale, but have been left out because of currency stuff, because of currency valuation, send us a direct message and we will work with you. So we just dropped a link in the chat. You can speak to someone on our team and we will give you information about our inclusive pricing to make sure that you're not priced out of the EdgeFinder due to currency values. Also, this is crazy. Somebody got mad at me for the way I draw my stars over the weekend. They said that this was some sort of like Israel thing. And I was like, this has nothing to do with that. So just so you know, that's just how I've always drawn stars since I was a little kid. There's nothing political about that. These days, it's hard to get away from politics. So just wanted to clarify that in case anybody got offended. My goodness. Anyways, what we're going to do here is, again, I mentioned that the first part was that we are doing inclusive pricing on the EdgeFinder for people who are outside of that. We want your business equals we want your money. Absolutely, we do. We do want your money in exchange for wonderful tools that can help you better analyze the financial markets through all sorts of economic data, sentiment scoring, and much more. That is what we do here. We're a software business. We build tools for traders. So take advantage of the EdgeFinder discount. And we do, like I said, have that inclusive pricing opportunity for people who are in places where the US dollar is very expensive. The other thing is that if you're somebody who is interested but can't make the full payment, we are also offering payment installments. You can split the payment into 2 payments or 3 payments if that is easier for you. All you need to do, like I said, is just chat with us and we'll work that out. We got a couple reps who can help you. So I'm looking at some of the dollar crosses and things look really interesting. Like if I take a look, for example, at Euro US dollar, I actually made this my chart of the day. I did a video yesterday in our Telegram channel, which, by the way, I'll be posting more of those extra bonus clips in our Telegram. The link is in the description. But Euro US dollar, I mean, this thing sold off a cliff on the open. My goodness. Big gap down and a lot of gaps all over the place. The question will be, is this market going to fill some gaps here and then continue lower? What's going to happen here, right? I actually think that, you've had this huge sell-off. I wouldn't be surprised if there's a little bit of a gap fill to start out the week. But then we'll see. We'll see where things go. Euro dollar still looks very weak to me. It's not just the tariff stuff. In fact, you can see the EdgeFinder is not accounting for tariffs per se. The EdgeFinder is accounting for a lot of stuff, but it's not reading headlines. In fact, the score here is based off of commitment of traders data, institutional money, which is favoring the downside here for euro dollar. It's technical based, right? So it's looking at seasonality. It's looking at momentum in this market or the trend. It's looking at PMIs. It's looking at unemployment rate, and it's looking at interest rate differentials. And most of our calculations, most of the algorithm is pointing towards euro dollar bearishness makes more sense at this time. I mean, just look at the technical chart and it would come to the same conclusion for me, which is this chart looks bearish. It's hard for me to get bullish on a chart like this. Had you have seen this move, then yeah, maybe euro dollar had some rise to it. But with EU tariffs also being pressured by Trump as well, that may be the next round of things. This market is skittish for a good reason. It's wondering, hey, what's next for this? So I like the euro US dollar bearish call on the EdgeFinder. That's been a wonderful reading in the last few months, and I'm going to look to kind of find opportunities on that. I've got 2 setups on the euro dollar. Either a return and retest of this trend line and looking for key levels of resistance, rejection intraday, something like that. If I can get that set up, I like that a lot. The other would be a break through those lows and a retest of this area that we are currently trading. So I like euro dollar to the downside, looking for opportunities to continue to sell this pair. I mean, if I'm watching any currency trades right now, it would be euro dollar to the downside. Personally, I did close another profitable trade on dollar Swiss. I actually closed this real close to when the open happened, just because, again, when it comes to like huge headline pops, I don't love to like take the gamble of whether or not it's going to fade or continue. Like when you get this big, like, oh my gosh, tariffs are going to ruin the world. And, maybe they will, maybe they won't, right? Nobody knows for sure. It's not as easy as tariffs bad, tariffs good. That is a really, really elementary way to look at tariffs. We discussed them earlier. Tariffs are simply a tool. Targeted tariffs, I would say, targeted and slow tariffs are probably more effective in my personal opinion rather than aggressive all at once tariffs. But tariffs themselves can be a great way to bring business back to a country as long as they don't respond or they don't turn into massive trade wars. So that's where the market's kind of struggling with that here today. Up next, we're going to bring in Ivan. He is our regular analyst and coach within the A1 Trading VIP group. He has plenty of knowledge and experience in the financial markets, and that is exactly what we need today. So what we'll do here is we're going to take a quick break, and then right after this, we'll be speaking with Ivan. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show. All right, we're back with Ivan. Hey, Ivan, how are you?
I'm pretty good, and you?
I'm good. It's good to have you on the show, especially for a day like today. Dollar index moving back towards that 110 level, just shy of it here. What are your thoughts on all this? Are tariffs the end of the world?
112. Yes, it is. Done with America. It's fun. It's fun. Made some profits today, so it's fun.
Well, what were you trading?
The dollar Swissy just bashed, but because I took profit on the peak, not peak. Because I was like, hey, I don't know if this is gonna go higher anymore. So I'm like, I'm out of there. So I was supposed to go to 92 something, and then I stopped because it's too quick, too fast. I don't like it.
Okay, yeah, fair enough. I didn't know we were
likes it.
in trade. I
also
I was long dollar Swiss. I took profits, like I said, just a minute ago, just near the open of this week. So, Ivan, tariffs are obviously the topic of the day. They're at this point, everything is politicized. Everything is so controversial. But what are your thoughts? What are your thoughts on tariffs?
Horrible. Oh, sorry. Fantastic. Neither of it's fun, quote unquote. It gives us volatility, gives us something to work about, it gives us some to use our brain. But it's not fun because it creates volatility, it stops you out. So my thoughts is good for America because it's going to lead to dollar strength. It's going to give us one direction at some point. So I like that. I like a direction. We have something to work on, not just range bounds. But yeah.
Yeah, they certainly do. I mean, if you take a look at the dollar index, you've just got this spike, this continuation here, as people try and figure out what they mean next. I mean, tariffs. I said this a moment ago, but I'll kind of reiterate it for people who may have just joined. Tariffs themselves are not necessarily good or bad. They're just an economic tool. They can be good. They can also be bad. So I think that what the market doesn't like here, why we're seeing, NAS and S&P 500 down on the day, you're seeing sell-offs in Bitcoin and things like that, is the kind of quickliness, I guess that's not really a word, but the speed, right? The all of a suddenness, if you will, that tariffs were put onto many places pretty aggressively, because, the effects of tariffs are immediate, right? So like when you put a tariff on a place, I know someone who is in the construction world, and right away they said like, oh, a bunch of the goods and things that we import, like we have to figure what we're going to do out, because a lot of the profit margins of businesses can very quickly get impacted, and that can lead to layoffs. So there's ways to use tariffs to your advantage, because again, what's also not great for the U.S. is just having massive trade deficits where we're just the net loser at a lot of stuff. So it's understandable why, maybe you want to reevaluate some stuff, renegotiate some stuff, but the all of a sudden tariffs may be what is freaking out the market today. Do you think, is this another 2018 scenario where in 2018 you saw the S&P 500 as an example, down at one point 20% in a few months? Do you think it repeats?
No, wait. China was given back in 2018. Was it about $200 billion worth of goods, and then $300 billion worth of goods? Now we have Canada, Mexico was also part of the last one. China, South Africa, maybe Brazil, European Union about to come in. So I feel like he's bothering more people this time. It's going to be a bigger impact, and also targeting all their biggest trading partners. So is this 2018 again? Yeah, I would definitely believe so.
Yeah, I mean, it definitely has the potential, especially with what we know about 2018 was, and by the way, guys, for those of you who are maybe less familiar on your economics history, 2018, as Ivan was just explaining, we saw large tariffs kind of aggressively imposed by the same president, right? This is his part two. Now, again, I do want to just clarify, this is not a this is not a political channel at all. In fact, overall, during Trump's last presidency, the market actually had a very, very strong gain. But during a specific period of time, which I think is what we're focusing on here, where tariff wars really took place, trade wars with China really took place, we did see a very corrective period as the market grappled with, tried to say, hey, what do we do here? We've got, tariffs coming in, China's retaliating, right? That's the thing with tariffs is, if tariffs existed where the US could just place tariffs and we knew that other countries weren't going to place them back on us, they would just be an easy go, right? But nobody, other countries are not stupid. They also are like, oh, well, if you're changing the trade dynamic, we too will change the trade dynamic. So, we saw that in 2018. It caused a very large market correction in a very short period of time. To give you some numbers here, you're looking at one point down 21% on the S&P 500, probably more on the NASDAQ in 83 days. So that was almost a 3-month period. And we saw this market completely change in a very quick time. I mean, look at before that, you had just this up cycle for stocks under Trump. So, I mean, this was just a massive run. And then the trade war drama. So it seems like Trump came out of the gate this time swinging on the trade war drama stuff. So we'll have to see where that shapes up. So, Ivan, what do you think about this? Do you think it's a prudent thing to say maybe stay on the sidelines on indices and cryptos and stuff and maybe focus elsewhere?
You mentioned crypto. Do you
Yeah,
remember
I know you're fully invested
2018?
in Dogecoin, you told me.
Yeah. Do you remember 2018? It was bonkers. It was crazy. It was amazing. I
Mhm.
think we went from, what was it? We went like seven. Well, I have to find it. I think we dropped like 70% or something in BTC in
Mhm.
2018. So a fantastic idea to be long. Yeah, what was it? 71% in 2022. That's 22, so 2018. It's not necessarily the greatest thing from what 20,000 or so. Sorry, 15 for
Yep.
8,000 to about 4,000 something. Is not necessarily a very great idea. So yeah, I don't like it. But okay. Point being, I'm not staying long Bitcoin at the moment. And I have said previously in a meeting earlier that this is a time to, maybe a couple of months even before you find the bottom. Because what took last time. But then it's go time again. And I believe we might be an all-time high at the stock market, given that he is going to continue with his shenanigans, because it is ultimately going to hurt businesses, because he wants, or the idea is to bring US businesses that has gone abroad to a lower cost country to come back and create factories and productions in America. But you can't make avocados in America, at least not the scale you needed.
Yeah.
So there's that.
So it sounds, so correct me if you're wrong, if I'm wrong, Ivan, but it
Okay,
sounds
sorry.
like you are a little bit more cautious with the tariff stuff, that you're thinking that this could cause perhaps a couple months of risk assets being challenged, maybe seeing some downside on things like Bitcoin and stocks, and maybe the focus is stay bullish dollar. I mean, that I think that's a pretty rational overall conclusion. Is that kind of your stance overall?
Yeah, that's what we have learned from before. But what I've also learned from before is Trump can change by next Monday.
Yes.
I can't remember exactly the country, but he had like a trade war shenanigan thing overnight in 2025. I don't know if it was Argentina, Brazil, or Uruguay or Paraguay or whatever it was, but there was a country that didn't allow or didn't want to accept the immigrants he was sending on a military airplane.
Colombia.
And then they were doing
Yeah.
overnight, and then by the next morning, everything was all resolved. So I want us to have an idea, generally speaking, not trading advice whatsoever, to look for and expect longer downturns for that to be the value you're looking for, rather than trying to chase the highest high that we have ever, and be okay, where is the best opportunity? Where am I going to wait? And if we make higher highs, if we go up to 6,200, okay, cool, great.
Yeah.
But that might not be the most likely scenario at the moment.
Let me ask you this too, Ivan. There's a chart that we have not yet covered in today's show that I know and you know a lot of people are looking at. Gold is trading at a fresh all-time high. You've got 28.27 on the spot price of gold against the US dollar. And it is not coincidental that this is happening on a day where people are scared. There's fear in this market. You could feel it. I saw a lot of my favorite content creators even issuing caution. My friend Kathy Lean, I'm not sure if you know Kathy, but she's very, very smart. Yeah, very, very smart macro trader. She's very, very smart. And she issued just a word of caution. And this is not somebody who's like a perma bear. I always look at, just a heads up to everyone. Everybody knows that everybody has like a kind of perspective on markets. Like some people are more optimistic and bullish, and some people are more cautious and more risk adverse. And everybody has their flavor, if you will, on the content creator space as well. Well, Kathy, I would say she's pretty unbiased. She's pretty, mixed, but she's very smart. If you guys haven't checked out Kathy, I would encourage you to do so. But she sounded pretty nervous about this, and she pointed out, and this is somebody who knows a lot about the macro more than myself, and definitely issued a word of caution on risk assets, and I think that's very valid. You can see the fear coming into this because the tariff. The thing is, whether you think tariffs long term will be a net positive or net negative, there's controversy on both sides for that. But if they are a net positive or net negative, it's kind of irrelevant to the today result. Right now, today, the effects of tariffs are felt negatively. In the future, there might be some net positives. But the point is, some people would argue short-term gain for long-term or short-term pain for long-term gain. Other people would say short-term pain for long-term more pain. It just depends who you ask. But the point is, right now, we know we have pain. And that's why gold, I think, is spiking here today. What do you think on gold? Is this would you prefer, let me ask you this way, Ivan, would you rather stick $100 in gold right now or $100 in S&P?
Oh.
Take your pick. Which one?
Wow. Okay. All right. I have to say, a bit of controversial take. I didn't expect gold to go higher, because if we are expecting this to create inflation, that should send the gold lower, as it didn't, or at least range bound in 2022. So my money's going to be on gold.
That's what I thought.
Interesting. My watch responded to you, Ivan. Sorry.
Hey,
Siri talked to you. Wait, so let me get this straight. So you're saying $100 in gold on the short side because you think it's going lower?
Oh, no. If you have $100, it's buy side, right? Only.
Okay.
Right?
Yep.
So I would buy S&P at the moment. So you're giving me what is it? Pest or cholera? What do you call it in English? Like,
I'm giving you a test, a challenge, a quiz.
Yeah. It's a challenge. That's a challenge, because if I believe we're going to do 10% lower on S&P, and gold is now 2008, and I think we might go to 3,000 with these shenanigans, then it just depends on how long you want me to hold that $100 in gold.
Yeah, let's say 30 days. You have to put $100 in S&P long or gold long 30 days. You're thinking more gold.
Yeah, I think so.
Okay. Yeah, no, that's fair. I guess I'll answer it as well. I think if I could choose S&P 500 30 days out or gold 30 days out, I have to stick to my system and say S&P. But from an emotional short-term perspective, it would not be an easy trade, right? Like you look at S&P these things have room to pull back. On the S&P 500, if I pull up this chart, if we could show that on my screen for a second, guys, check this out. So you've got S&P 500 traded briefly across the all-time highs, closed there, looked great. I was super thrilled. I was like, yes, we've got the all-time high breakout. And then we quickly rehashed out our bearishness here with the deep seek sell-off, right? And now we regained, and again, I think that this market is really throwing people into a headspin, and understandably so. I just want to say to everybody who's listening, if you have felt confused by the market in the last week, you are not alone. This is a very choppy back and forth market as people are trying to figure out, is Trump going to be more tariff focused and kind of break down a lot of the systematic stuff in our world, in the US, or is it going to be more focused on pro-business and growth and all that? And it seems like, maybe in the long term, maybe he is going to be more focused on, second half of his candidacy going absolutely bonkers on ripping the economy higher. But in the short run, there's some headwinds here. And I think the market is always kind of short-term focused. So it's not loving it. And may have some room to correct back to at least 5850 on SPY or SPX, and maybe see 5700. I wouldn't be surprised if we got a bit of a corrective period. Maybe it's not, Ivan, maybe it's not 2018 level fear where, China and the US just went straight head to head for a couple months there. Maybe it's not that large, but even if it's half of the same damage done in 2018, which, by the way, later was resolved and the market ripped for the next few years. So don't get me wrong. I would look at this as a short-term buying or longer-term buying opportunity. What if we just got 10%? That's half of the distance, right? 10% seems pretty reasonable.
Yeah, and by all intents and purposes, if you have enough money in your, I don't recall it, war basket, is that war casket more likely? This is still a buying opportunity. It's still a 1% pullback, but if we talk 5, we talk 10, I'll be more entitled, or I will be more inclined. I'm not going to buy now. I'm sorry. I will rather take the highest high, pull back, and then rather than buying now because of the. Well, I see the potential at least for 10% fall. Another question a bit earlier. Where's Frank?
He is taking more of a developer role. We've got so many projects right now, so he's taking a backseat to live streams. Plus, we've had so many new faces join the shows that we've got no shortage of guests right now. So,
thank you.
But Ivan, you have a special place on this stream. You're an OG. You've been here for. Ivan has been here doing this since at
21?
least 2021. Yeah, you've been here tuning in, and it's been an awesome collaboration. We've loved having you on, Ivan, and the crowd. A lot of them don't like you, but I keep bringing you on anyways. I'm just kidding. They love you.
Okay, so yeah, I always want to take the higher ground. I always want to take the better ground. What is the high time frame thinking? If that's the theory for the past 3 years, is you are probably going to go poor waiting for the pullback. But when you have such destructive thing coming in, because that's what he's trying to do, to destroy current systems and processes to create new processes, has to hurt a bit. It will hurt businesses short term. The only question is it also going to hurt long term? Because is US businesses able to take back production back to America, those who have flagged out? And second of all, and third of all, it's been only the big 7 that has done most of the rise in the S&P 500.
Yep.
In 2024, 2045.
That's true.
So
it's been a pretty narrowly led market. And again, if we could just switch over also to my screen, guys, I don't want to miss this news event. I've been bad recently. We have manufacturing PMI data coming out in the next 1 minute or so, about 30 seconds. Just wanted to show you this here. Look at this. This is an ugly all markets view. You guys know we do this for every stream or every news event. You got gold ripping higher. That's a beautiful thing for the gold longs out there, but stocks struggling here, right? You've got across the board, S&P, there's NASDAQ, there's the Russell, dollars higher here, oil all over the place, and Bitcoin coming back strong despite all this stuff. We got breaking news here in about 10 seconds. Let's see if PMIs are going to save the day, Ivan. Maybe they will, maybe they won't. Coming in here in just a second.
Should be all right.
9.3. We'll also get some prices data as well.
Tad stronger.
Tad stronger, okay. 50.9. All right, so ISM's manufacturing PMIs came in better than expected. And let's see the market's reaction. You got stocks not moving too much, slightly lower, I suppose. Then you've got gold slightly lower, dollar index taking the reins once more. Maybe going to actually hold this gap open spot, right? So many times when you get this big gap, the question is the market going to fill that gap or hold that gap level as support? So far, looks like gap open is being held by the buyers here. We'll see if that persists. Oil lower as well. Ivan, I want to ask you maybe the hardest question of the day so far. PMIs come in better than expected. Right now, is this good or bad news for stocks? Like, is strong economic data, are we back to a point where strong economic data would suggest more inflation, so it's bad news?
Good news is bad news. Well, you got manufacturing PMI above 50, back into explanatory area, and I think it's good. Good for the economy, but bad for the stock market, and good for the dollar.
Sure. And I think there's been an uptick here in manufacturing PMIs in recent months. A lot of people contributing that to the kind of pro-domestic onshoring stuff that Trump seems very adamant about doing. So that is, that I think that's why we've had two back-to-back strong manufacturing PMIs. This has been in contraction for some time. There's hopefulness that the tariffs will make U.S. manufacturing more competitive. That's an area that, again, with tariffs, there's winners and losers across the economy. So perhaps this is why there's a little bit of an uptick in this particular part where they say, hey, look, manufacturing might be a little bit more effective. That being said, for the stock side of things, higher productivity in an environment where now tariffs are under scrutiny because maybe they're going to be inflationary. Then you have an economy that is also heating up that could also be inflationary. And then, one thing to throw in there, Ivan, that we can't discount is there's not a clear resolution with Ukraine and Russia yet. And so that also keeps oil prices higher, which keeps inflation still kind of as an issue. What are your thoughts on that? The geopolitics stuff and inflation outlook. What are your thoughts?
I saw Russia wanting to increase production. I think that's why oil might be having a bit of a downturn today. I gave it a sigh. That's my theory. Well, we've resolved kind of the Israel-Palestine situation. That's kind of reduced down there. Ukraine and Russia seems to be locked, with Russia having an advantage seemingly. And also now US pulling out funding, and maybe also Trump wanting to go out of NATO, and trade war with Europe. Well, the funny thing is, I would argue that the current risk environment, geopolitics, actually might send oil higher longer term. Because of the higher prices of goods and services in America, that generally is inflationary. That creates the higher oil price. But Nick, you need to be the witness here. Remember today what your fuel price is on the gas pump is, and then come back in like 3 months or 6 months and tell us is it still the same, because you guys are going to have tariffs on your oil. And 70% of the imports is coming from Canada and Mexico. So this one might have a upturn, and contrary to what Trump wants to happen.
It's fascinating that you mentioned that too, Ivan, because as you said that, it prompted me to look at the difference between US oil or WTI and Brent crude. So if we could show my screen here for a second, take a look here. Here's US oil down by 77 cents or 1%. Let's compare that to UK oil, because exactly what Ivan just said, only down 0.5 US dollars, 0.77. So UK oil holding up a little bit better than US oil because of exactly what Ivan just outlined for us. Remember, where are the tariffs most pressing and most urgent right now? Canada and the US. US imports a lot of its oil from Canada. So specifically, that's why there's WTI and why there's Brent, right? There's different marketplaces here between different places. So really good point there. US oil specifically taking a little bit of a hit, but popped initially. I too think the same thing, Ivan. I have this trade. It's not been a good entry. I may look to have to re-enter this idea, but I wouldn't be surprised if we find a bottom. Maybe I stop out. Maybe we go find support here or here. But I too wouldn't be too surprised if oil prices are going to be on the rise for a little bit of time. You had that snap reaction on the open, right? So you gapped open, and you saw it on Friday too. The intraday price action of oil. You can see we had kind of on Friday this jump back up towards the end of the day, and then the gap open here, now trading a little sideways to down here with possibly that news that you mentioned a moment ago with Russia. But we'll see. Really interesting stuff happening on the oil front. And of course, if oil prices rise dramatically, that could impact the dollar because inflation expectations could rise as well. Maybe that's a little bit of why the dollar's up here today. Here's a question for you too on the currency front. So dollar strength seems to be a stance that you've had and continue to have. Which charts are you looking at the most? I know you mentioned dollar Swiss. Do you have other US dollar crosses that you're watching?
Euro dollar would be great.
Mm-hmm.
If it only had a pullback.
Sure.
Back to filling the gap. And the only way that could happen is that there is no more threats about Europe having a trade war, but then having a trade war. That would be great. That would be like the perfect scenario.
There you go. That's maybe you just predicted the future, Ivan. Maybe there's gonna be like a positive day, and then it will persist.
I was actually looking at dollar yen the other day, and I know you, yeah. And I kind of, I'm scratching my head. Why is it falling? Because in the morning, yen was falling, but now it found some strength, and now it was like, oh, let's go back higher again. So to me, that is like, that might not be the best pair to trade, because dollar would be great to buy, but maybe not against a stronger yen. Remember, we are potentially hiking twice this year for the yen, but they're still doing what? By the way, I haven't told you this before, but I found something very, 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 very crazy the other day.
Mm-hmm.
Have you seen how much bonds they're buying every month?
No.
Presumably.
Show me this.
I'll tell you money. I'll tell you for free. Purchase of government bonds. They said they were going to buy about 6 trillion a month and then reduce. October, November, they bought 48 trillion yen.
Wow.
Who told you that?
That is
so I don't know.
That's a lot.
It's
So what
a
does
lot.
that tell you?
That they're confused. Because inflation is rising, wage growth is rising, GDP is flat as a pancake, around zero something. So they're desperately trying to create inflation and growth, but is hardly getting it. So they increased the interest rates in the last meeting. So I'm wondering what is going on. Why wouldn't they decrease this? Because that would be the same. So I think it still speaks about how fragile or how divided the Bank of Japan is in their assessment of the economy, which is inflation is high, wage growth is high, but growth is not, and people are losing what do you call it, confidence in their economy because everything is rising and their wages is not following through.
Yeah, very interesting. I have another bond related thing I found that I wanted to show you. Check this out. So TLT, this is US government bonds, 20 plus year treasury bonds, are up today by 1.25%. And the interesting thing about that, so a jump in bonds usually involves a fall in yields, right? So we have a fall in the 20-year, fall in the 10-year. So bond yields are lower today. People kind of rushing to that safety. TLT oftentimes, not always, but oftentimes moves somewhat correlated to gold. So we have this interesting thing happening where gold is up, TLT is up. But again, we know this to be true. There are times where the dollar index and gold move up on the same time, at the same time. And I think that when that happens, that is usually a good signal that there is some true risk off sentiment in the markets. When people rush to bonds, when they rush to yen, when they rush to gold, and they sell everything else, that is evident of a more risk off move. So that's what I think you're seeing here today, a true risk off move. You got VIX up 21%. This is your classic by the books, even risk off day. Bonds up, yen up, gold up, dollar up, everything else kind of getting hurt. So just wanted to point that out to everybody who's out there who's wondering, let me say this. If you're somebody who's saying, what the heck is happening to Bitcoin or to NASDAQ? Well, we've been living in a risk on environment, which those things are the easy trade. In a risk on environment, NASDAQ higher, stocks in general higher, cryptocurrency higher. If you are taken aback and surprised by today, then what you have experienced is a classic flip between a risk on environment and a risk off, where everything sort of reverses roles. And we see some of the stuff that's gotten beat up at the expense of a risk on environment take its turn. So, Ivan, I think we might have seen a little bit of a flip more into a risk off environment, and we haven't seen one in a while. So a lot of new traders are not used to that switch back into a risk off environment. What would you say to people who are maybe shocked by the recent market moves? How would you caution them in trading a risk off environment?
I would say, before your last sentence, take notes. This is pure risk off. What, maybe not dollar yen, but what dollar did, what the Australian dollar did, or for that matter, go to the indices of those currencies. Australian dollar fell but has a pullback. Okay, what does that tell you? The Brits had a fall, but is now having a deeper pullback. Now you can see the individual strength, and because the first fell, and then who is performing better and who's performing worse. That is kind of depending on who's hurt more or who is going to be affected more. But you can see Euro here hasn't had the same pullback as the pound has, and pound is now only today down 0.5%, but Euro is down 1.24%. So take notes, learn, because this can happen again. Risk event happens almost every year. It happens every year. It's named differently. If it's Ukraine war, is it Israel war, or is it oil gas line? Is it a tsunami? What is it? It doesn't really matter. Market behaves the same way. Who falls and who is doing worst and who is doing best is always going to be the same. Dollar best, everything else falls. And Aussie, generally speaking, Aussie and New Zealand is having the worst day. And actually, New Zealand is actually having, percentage-wise, the worst day.
Yeah. And, I also want to just clarify, too, that when we talk about a risk on versus risk off environment, one day does not truly, someone in the audience asked, can you clarify what risk on versus risk off is? And the simple way to think about this is basically when things are good, when people feel comfortable with markets, where they're not terrified about what's happening and so or whatever, they typically take more risk. So people have a focus on either putting more risk on and taking risk in order to grow, investments, or people shift more into protection and defense. Basically, risk on is offense, risk off is defense. When people go into defense mode, they're not worried about making maximum money. They're worried about protecting the money they have. And those two environments are very different. And knowing how to trade in each one is really key. Now, does today signal that we are certainly going into a risk off environment? The answer is no. I personally, and this is the way I look at it, I look at something like the US economic heat map on the EdgeFinder and I say, show me the colors. And when this tilts more red, then we have signified that we are actually in a risk off environment. This is kind of my confirmation indicator. I want to see these things really materially change because look, manufacturing PMIs came in better than expected today and they remain blue. So that's still a risk on indicator. So we can look at this as a net and say, where is unemployment? Where are PMI numbers? Where's GDP growth? If this all starts to print red, then I would truly commit more to the risk off side. But I'm going to stay hesitant and I'm going to wait for quote unquote confirmation from the US economic heat map page before I jump to the conclusion that it's just sell everything, terrified, risk off environment. I think that days like this are going to happen where the market can fake you out. It can suddenly look all risk off, and then the next day it looks risk on, and then the next day it looks risk off. To me, to filter the data a little bit is most important. So I just look at the heat map and stay focused on the big picture. What's the summary of the data looking like? Because look, we can all have our opinions about tariffs are going to do this, and Trump said this to this person, and Powell responded this. You can do that game all day long, but that's a really difficult game to truly predict the future. I am not a big fan of trying to predict the future. I'd rather just look at what we've got, weigh our probabilities, and take good, educated guess decisions on where we think markets are going with good risk management. I think Ivan and I have been proponents of that for years now. We do the same thing day in, day out. And psychology is really important on days like this.
Like probably the last thing I'm going to say anyways, but back in risk-off environment 2020, we had a fall on Australian dollar, US dollar, about 21% fall. At the same time, I'll show my screen. Okay, cool. But at the same time, the dollar index, when Australian dollar fell, the dollar index itself did about 3% plus. So when you're thinking of risk on, risk off, do you want to lose literally 20% of your money, or do you want to gain 3%? So in a risk-off environment, you are then likely to lose 20%.
Yes.
So you try to go and find your 3%.
Yep.
Versus in a risk-on environment, you can gain those 20%, but then you don't want to be buying 3%. Of course, you want 20. So in many markets, there is like 20 negative, or it's an Aussie market is either losing 20 or gaining 20, and you want to be staying away when you're about to lose those 20.
Yep. Well said. Again, it's a focus on, do you want to protect money or do you want to try and make money? And the market's mood shifts greatly month to month. Ivan, thank you very much for coming on today. That's the end of our session. We got to hand it off to Chris Pulver, who's up next. But before we go, make sure everybody, if you have not already, go subscribe to Ivan. He has his own YouTube channel, puts out great content. And also, by the way, he is doing coaching calls within our group and working with lots of different members to help them reach their full potential. If you're struggling with the psychology side of trading, I would highly recommend reaching out to Ivan and ask him about his coaching offerings that he does. Ivan, thank you very much for coming on the call today.
Thank you very much for having me.
Say, man. Okay, guys. Yeah, we are going to continue the show. Up next, we got Chris Pulver. Let me just remind everybody who may have missed me say this earlier. The EdgeFinder is our tool that we keep referencing to look at economic data and sentiment, and there's a million tabs here. If you want the chance to be able to play with this data yourself every single day and to help find better trade setups in the markets based on the macro, based on economic data, sentiment data, extremes can be extremely good opportunities to look for in markets. If you haven't already taken advantage, we're doing a 30% off discount right now. And for those who message in right now, you can do 35%. And we are offering payment installments for a limited time. So take advantage. If you're looking to split up the payment to take advantage of this discount so that you don't miss the opportunity while the price is low, send us a direct message on our website, speak directly with a support team member there, and they can get you hooked up with a copy of the EdgeFinder at the super low prices that we're offering it at now. Okay, guys, up next, we're going to have Chris Pulver taking over the show to guide you on this crazy rocky market day. Stay tuned. Chris Pulver's up next.
Hey everybody, thanks for tuning into today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? Happy Monday. How we doing today? Actually, today's just fine. So is it a surprise? Nope, because we were kind of bracing for this on Friday last week. If you were with me for my afternoon session on Friday when tariffs started to hit, that's when the headlines were affirming that it's going to be February 2nd or February 1st over the weekend. And the market had a huge sell-off on Friday. I said, beware of the potential gap on Sunday night for futures market. And that's exactly what happened. I posted this in my Telegram last night. First thing I did is check my phone around. So this is 6:17 p.m. Eastern time. You can see that futures are down. So there's S&P futures, there's NASDAQ futures, and down last night with a pretty healthy drop. And that's what we got this morning. So futures market was down and stayed down. Let me go into my futures trading right here. There we go. So there's your big gap from Friday to Sunday night. We're pretty much around the same price. And same thing here on NASDAQ futures. So gap lower, we're around the same level. So what's interesting is we haven't made fresh lows from the night. So we gapped lower, kind of poked those levels. You got to wonder if this is going to be something that the market can kind of hang out here with just a gap day and just kind of this own chop fest with the market like caught on its heels. We're down about 1.9%. Do we contain, right? NASDAQ is down. There we go. This should be closing out for profit here. Booyah. SPX for 260 for the win. Perfect. So anybody that's in my daily profit play, that's all I needed to see. And there you go. So nice little winner there. And I've got one other trade running. So 335 trading at 330. Just going to hang on to that one for a second. So maybe do a quick update. Update. Okay, the other one needs more time. So that should be good. I posted two new trades in Pulver Alerts this morning. I did a SPY trade and a QQQ trade. I like those quite a bit, actually. We do have higher volatility, which I'm totally fine with. Let's figure out how. Actually, I think I can get this trade posted this morning. Let me see. Yes. All right. Look at this trade right now. I'm going to go SPY. SPY. I don't have any expirations right now going into April. So the next one, I mean, these are going to get filled in eventually, but right now I've got an April 17, which is out 73 days. I'm going to look at a trade. Son of a biscuit. So I got to go 5 wide on the SPY. I may not be able to take this trade the way I want to, which is okay. All right, easy does it there, Price. Price is making a screaming comeback right now. Okay, we'll see if things just chill out for a second. I have one trade in here. SPX. All right, so I'm down about $60 on that one. I just need price to calmly settle the heck down. Give me another 50 cents profit, hopefully. Keep an eye on that one. But I'm going to look at a trade out to April. I think the only issue is my spreads are not awesome, but let's see if I can figure it out. So if I go out to April, so the trades I posted in Pulver Alerts right here under the index column. So I did QQQ and I did SPY. So on days like this, we have higher volatility. That's one of my favorite trades to go to. So I posted that. It does require some capital, so I would recommend if you're going to take that trade, you want to have a margin account. You want to have some cash available. If you don't have that, then don't take the trade. Okay, what the fudge, dude? What is up with this? We just had a $5 rip in the last 4 minutes of trading. Is there some breaking news that I'm not getting? Let's check out. There you go. Well, just like Colombia, Mexico's president is tariffs delayed for a month. Is that Mexico or is that US? Looks like US unveiled it. Mexico's retaliation is going to be for a month. Just freaking volatility, man. Crazy stuff. And then the market's like, hooray, we're not getting smoked by 2%. Market was down 1.94%. I still don't know if we're going to fill the gap today. That's a pretty healthy move. We'd have a 1+% gap. I mean, it's difficult for the markets to fill those gaps, but one little manipulation candle higher, and then the market fades and just kind of chops around. That's all I need for a little trade this morning on SPX. Let me catch some comments here. Okay, so I want to take a look at April since I don't have any expirations out to April. I don't love the strikes right now. Let me go to it might be easier to go to SPX, honestly. If I go weekly, as long as I can keep these 5 wide, this could be a pretty good probability of profit. The issue is I'd have to create a wide spread. So let me just take a look at this one really quickly. If I do, looking at like the 20 delta, so 25 by 20, and then I find a wider spread. So I go 5 wide on the debit spread, and then let me see if I can go maybe 20 wide and get a credit. 5,300. So if I sell that, buy that, so it's 50 cents credit. That's not a bad trade. No, these strikes are way off though. Okay, so I can go 30 wide. High enough probability to profit, 52.90. Shoot, I might not get. I mean, if I get filled for $1, that's okay. I get a profit trap on here, $5. But man, the bid mid ask is all over the place. All over the place. Okay, let's check SPX prices really quickly. 59. Where the heck's my strike? I think I did like a 60. 59.90. Son of a biscuit. So darn it. Well, 335 needs to be 670. I think I might take a small loss on this one here. That is annoying. Okay, I'm going to close this one down for a small loss. 6 dot. So you got it here for $6. All right, it's got filled for $6. That's fine. Okay, let me see if I can get this trade in. So let me go SPX out to April. Okay, let's go SPX to April. Sorry, get back to this trade here. April. Thought I had the trades entered in. If not, I'll start from scratch. There we go. April 17th. All right, guess I got to start this whole thing over. So the positive thing is Qs are in, SPYs are in. I'm looking to get a trade for income. I'm going to look at SPX. April 17th, it's out 73 days. So a 25 by 20, which is a debit spread. And I'll move this way down here to like a 10 delta. See if I can turn this into income. So again, I like I said, the bid mid ask is pretty wide on this trade going out to April for right now, but I want to look and see what the percentages are. So if I sell the 5290 or 5300, maybe the spread's a little bit tighter, and then go, that's 20 wide. That's not a bad trade there. So max loss, profit trap, buying power is pretty tight. I don't mind that trade at all. Go a little bit wider. All right, let's see where 5300 is on the SPX. So 5300 is clearly way the heck down here. We'd have to have a pretty nasty spill. We'd have to drop another 11% on the SPX for this trade to be threatened and take any risk. So I'm going to try to take this trade hopefully for $1. a dollar. $1 credit. See if this will fill. So what's the buying power here? 2,000 bucks for buying power. $1's not filling. Let's try 90 cents. I mean, the liquidity is a little light because I'm not getting filled. I'm not going to take less than like 50 cents on this trade, but let me see if I can get filled for 80 cents. $0.80 not filling. 70 cents, survey says. Come on, man. $0.60. All right, just got filled for 60 cents. This one I can take across the board. Let me see if I get filled for 60 cents on all these. Okay. I'll put this trade in pulver alerts. Just give me a second here to get them all filled. There we go. Seven, 6, 3, 4. Nice thing is this one's a little bit easier on the wallet for cash requirements. It only requires about $1,900 in cash because I'm doing this on IRA accounts and on margin accounts. So that one should be filled. This will be for 7.2. Okay. Filled there. Almost done. Okay, and that one should be already filled for 60 cents. Oops. This one for 2 contracts. Okay. All right, so let me get this one added in. So SPX. I'll post this in the alerts. This is for April. So April 17 expiration. I'm buying the 50 625. Selling the 5620. Selling the 5300 and buying the 5275. So 60 cents credit. Mechanics of the trade are pretty nice. I've got about a 92% chance of profit. I've got a nice profit trap on this as well. So I've got a $5 profit trap. 92% probability of profit. There's no assignment risk here. It only requires about $1,900 in buying power. So I'll get this one posted, and this will again be in the index section of Pulver Alerts. New trade. SPX500 expiration. Buy the 5620 put. Sell the 5620. Oops. So I'm buying the 25, selling the 5620, selling the 5300. Dang it. And buying the 5275 put. About 1940 in buying power. There's no assignment risk. So there's $60 credit per contract. There is a $500 profit trap and a max risk of around 1940. Okay, so I'll build that one out. SPX. Let me build this trade. So I'll put this one here. So this is what the trade looks like. I'll post this. This will be the part that I get posted in. So let me go option leg, option leg, option leg out to April. So I'm going to do the April 17 weekly. And there's going to be 4 of these. So I've got the buy, put, sell put, buy put, all one contract. Okay, 56. Nope. 56.25. Buy 56.20. 5300. By 5275. There. So that's what the trade looks like. So pull in the credit. Oh, I got to switch these. My bad. Hang on. These are all puts. There. So I have my credit, got my profit trap. There's my risk. Take a screenshot. And this can go in the Pulver Alerts. There we go. Okay, and the final piece would be the screenshot. Okay, that trades in. A lot of volatility today. Totally fine. Had about a about a $20,000 P&L swing, which is not too shabby, in my favor, which is nice. So had a bunch of trades close out for profit, which is nice after recentering. Basically what that means is I've been taking trades where I'm selling up here, selling down here, and just a lot of indecision. And this is a lot what we talked about all through Q4 towards the end of the year, having a difficulty getting to all-time highs and just pumping through these all-time highs. Even as excited as the market was for Trump, there is tariff reality, and that's what we just dealt with over the weekend. And you can see the market opening up as is, but a lot of intraday chop, which is right here. So we'll see. I think the market probably settles in for the morning. So we have, gap lower, a little bit of volatility, and we'll see if it's just going to remain somewhat calm. But obviously, price can do what it wants to do. It could be an immediate gap fill today. Who the heck knows? And it's just another. There's a close last week, Friday. Deep Seat comes in, spends the entire week getting back to the highs. Here's a Friday. There's an open. Market's like, tariffs aren't too bad. It's like, I don't know, but expect volatility. So all I'm doing is giving myself a lot of room for error, generating income, and just trading. That's all I'm doing. All right. So anyway, those are posted. So SPX new trade today, SPY new trade today, QQQ new trade today. We also have a bunch of earnings this week, which I should have some screenshots of. This is earnings for this week. Let me try to find some notables and probably price out. So we got Palantir after close today. I have a trade in on Palantir already. PayPal has earnings. So I want to take a look at, this is going to be a busy morning. So a lot of earnings today. Dollar, gold, silver, stuff like that. I mean, that's fine. Let's take a quick peek. So let me do some top down, and then Chandler, will you let me know if I've got a guest coming on after me? If so, let me know. I'm looking at some earnings plays for this week. So we have, I think, over like almost 500 companies reporting earnings this week. I could be underestimating that, but let's go to StockTwits to find out. Okay, I'm good, thanks. So this week I think we have like 497 reporting. Let me confirm that. So we have 33, 123, 150, 163, 24, 493. All right, notables. Let me take a look also at my. All right, I'm going to try to find some liquid instruments to trade today. There we go. Okay, let's go to earnings. Oh my gosh. Freaking logins. Give me a second. There we go. Earnings calendar. So here's what I want to take a look at. So today after market. Palantir SMCI. So Palantir, I already have a trade in. SMCI, probably not really going to touch this one. This stock has gone from what was outperforming NVIDIA to now, I don't even know what to say other than strikes are going to be, like, this is volatile. It could go up, it could go down. The fact it's only $27 probably makes the chains look a little bit rough. SMCI, 50 IV. I mean, I guess we have 50-cent spreads. It's reasonable, but we're only expecting like a $3 move. So it makes it pretty tough to take this trade. I think I'm just going to say no to that one. But I'm in Palantir already. Let's go to some of the more liquid stocks here for tomorrow. So we've got, I think the asterisk is going to be pre-market. So ADM, see if I recognize any of these. Pepsi, Pfizer, PayPal, Spotify, Snapchat. I do have some earnings potential on Snapchat today. Or it's tomorrow, I think. And I'm going to see if that one gets up above. Let's find out. Also, I want to put on some trades. I think IBIT. Gosh darn it. Right out of the freaking gates. So Bitcoin catching a bid this morning. Son of a biscuit. I was hoping to add another credit spread or sell some puts, which I'm totally okay doing, but let me check in a couple things here. So IBIT, I think I might just sell a put. IBIT. If I go out to April, got a bunch of shares, got a bunch of puts, that's fine. I'm gonna go 50 and $1.29 right here. So all the way down to 40 bucks. 50, 45, and 40. What's that tie up for cash? Get rid of this one. 10 grand cash. That is a lot of buying power. Just that one there for, okay, I'll do this one. So for 45, it's going to sell a put. All right, filled at $1.28. That's a 4/17 expiration. 45 sell put for $1.28 credit. That is okay. So IBIT. All right, earnings. Back to earnings. Which screenshot? I don't know. I'm going to put this on another screen. I'm going to go to my screenshot where I can just pull up those logos. This might be a little bit easier for me to pull from. So today after market, Palantir I'm already in. PayPal, Spotify. Let me take a look at some of those. All right, so I'll highlight those. PayPal. Do I like any of the pricing? PayPal is. I think I got rid of this trade already. This was for profit, close for $1.82. Yep, so this one's done. We're trading at 87. I did a diagonal spread. Let me see. Let me see if I still have PayPal exposure. I closed it for profit. Do I have any PayPal exposure? Okay, so all my PayPal is officially closed up for profit. That's fine. Now let's get into the earnings discussion. PayPal, Spotify, Pfizer's going to be a low mover. PepsiCo, low mover. Ferrari maybe has some earnings if it's liquid enough. Merck, Estee Lauder, AMD could be a big one Tuesday after close. Google, so or parent company Alphabet, Snap, that's Snapchat, Chipotle. All right, there's some plays that I want to take. Definitely some plays I want to take. All right, let's go PayPal. Start out here. I'm gonna have a busy day today. I think I'm gonna throw on a handful of trades. So PayPal, we've got an IV rank of 78. That's pretty solid. We've got earnings tomorrow before the market opens. Let me take a look and see. So volatility wise, 16, 15, 9, 9, 9, 9, 11, 9, 8. 9. Okay, I think 9 is pretty safe. What's 9% on an $87 stock? It's going to be about $7 to $8, right? So 0.09%, 87.64. We're looking at about an $8 move on PayPal. So how often do we go to at least 9%? If I want to be more conservative, I can say 8%. 0.08 times 87.62, about a $7 move. All right, so the spreads are dollar wide. I need a $7 move. That's a little much, but I can make it pretty cost effective. If we have at least a $7+ move, I can probably price that in. Now the question is, how many times do we at least go 8% over the last 10 earnings? So I'm looking for at least 7%. So it gets there day 5. Okay. Gets there day 1. Doesn't get there. Gets there immediately. Gets there day 3. Gets there immediately. Gets there immediately. Day 1. This one does not get there. This one gets there day 8, which I don't love that when it's all the way to the end. This one gets there immediately. So 1, 2, 3, 4, 5, 6, 7. 7 out of the last 10 at least gets to an 8% move. I'm going both directions on Palantir. I'm just trading the earnings itself. So PayPal is reasonable. Now the question is, do I like the strikes enough to take this trade? Now, market makers looking for about a $7 move. That's about what I'm calculating myself. I could buy the 88, buy the 87. I'm paying essentially that move. If I go 10 wide, 88 to 98 and 87 to 77. So I could pay $5.60 for what should be a $7 to $8 move. Now that gives me a tiny little sliver of profit there if I'm right. But that also means that I'm overpaying. In my opinion, I'd be overpaying where, look, my max risk here, like if price only goes like $3, $4, $5, I'm paying $560 for a price that's only moving $3 or $4. So that would immediately turn it into a loss. So I'd rather not just spend the money on the premium when I'd rather take it very cost effectively. And if I go 88, we go $7, I'm going to buy the 94 and 95. It's going to cost me 20 cents to make $80. So I spend 20 to make 80, or I spend 22 to make 78. I'm okay with that. And that's going to be roughly a $7 move. Now I can go one strike there. So now I spend 27 to make 73. That's still favorable. And let's go to the downside. I can buy the 81 by 80. So now it's essentially a 1-to-1. I don't mind this trade. I'm going to take this trade right here. So if I can get in here for less than 50 cents, if price is below 80 or price is above 94, I keep my $50. So I'm going to see if I can get in this trade for 49. Let's try this one here. Got filled for 48 cents. Okay, so the idea on that trade is it's going to be above the call side or below the put side for me to close out for profit. I get $1 credit and it costs me 48 cents. So I'm looking at about a 1-to-1 on that trade. Okay. So that is new trade on PayPal earnings. Getting this posted right now. And it's February 7th. So I'm buying the 93 call, selling the 94 call, buying the 81 put, selling the 80 put, 48 cents debit. I like that trade there. So I need price to be greater than 91, up greater than 94, or less than 80 for $1 credit and net profit. All right, so that trade is in. Okay, if anybody, I see Xavier's comments there on this stuff being complicated. This is also why I have courses, practical options. Okay, here's a class. So I've got a intro to this. Like this is my full practical options course where I give you 13 of my favorite option strategies from trading the market bullish, bearish, or neutral. Okay, if you want a basic version just to get you started on options and the language, there is a quick options course. So if you're interested, If you buy the pulver alerts, this is accessible, where I'm giving the $497 full practical options course as a thank you to anyone who buys the pulver alerts. So this comes with intro, key terms, and the silly vocabulary that comes with trading options, analyzing a risk graph, looking through option chains on multiple broker platforms. There's a strategy guide walkthrough as well, trading the market bullish or bearish, either just with long options or short options or spreads. And then I do a little bit more fancy stuff like the calendar spreads, butterfly, that's including the broken wing butterfly and regular butterfly, and then strangles and iron condors. So if you're interested in this option stuff, which is what you see me trade almost every day, this is a good way to get started. So either one, you pick up the pulver alerts and this will be included, or if you want to try something for 27 bucks, you can buy it for 27 bucks. So if you want that link, I'll post the link here for 27 bucks. It's not going to break the bank, but at least get you started, get you excited about trading some options because it's freaking awesome. If it wasn't for options, I wouldn't be as happy managing money as the way that I am the last handful of years. So I managed a currency fund for a long time and grinded every single year and did my best. Did fine. I mean, I averaged like 18% a year in a currency fund for clients, but it was incredibly frustrating to deal with flash crashes. I mean, look what happened over the weekend, right? The dollar pairs, which Forex is like super liquid and rarely has any weekend gaps. And what have we had? Like big dollar movement. You got all this stuff where it's going to be currency wars and who's cutting and who's raising, and your stop losses are always going to be hunted because your liquidity target. Options, you have a line in the sand, and time. So if I can say by this time is price above or below, and you can either make money, you can risk money, but it's all defined, and I like that way better than the nonsense you have to deal with all the highs and lows. Okay, so anyway, if you want to check it out, it's right there, practical options. And like I said, 27 bucks isn't going to break the bank. If you like it, you can upgrade to the pulver alerts and get yourself the 497 course to go with it, or you can just buy them a la carte, whatever you want. But I don't think there's any excuses. If you want to learn how to trading options, for basics, at least give yourself a starting point. But you're now trading like 4-dimensionally if you're trading options. Up, down, sideways. I trade a lot of options with rarely owning anything. I don't really own the underlines. Like even the trades I just took on PayPal, I'm not going to own that stock. It's a trade that's going to make me money or it's not. Okay, so now I'm going to mark up my screenshot here because PayPal now has a trade in. I want to go to Spotify. Spotify trading up to 550 bucks, all-time highs, I think. A very volatile stock. Can it go higher? Yeah, maybe. I don't know. But I want to price it out. So Spotify. Pretty good earnings, 14, 15, 14, 13, 13, 12, 12, 13, 14, 14. Average is 14. I'm going to go conservative and say 12. Okay. So if we go 12% on Spotify, we're trading at 549. 65 bucks is the expected move. I need to check on the option prices. If the strikes are too wide, maybe they're $5 apart. Maybe it's not a good trade. But that's a pretty big move. I mean, looking at a $65 move, take a look at the IV here. I mean, IV's at 97.5 and the stock's been just absolutely north. That's pretty wild. This is before the market opens. So if I'm going to get these trades, then I got to do it today. And then how many times do we go to at least 12%? That's what I want to find out. Post earnings, 12%. So this one, we get there at day 8. I'm not going to count that. This one, we get there immediately. This one, we are just shy of it. This one, we are not there. This one, we are not there. This one, we go to the downside. This one doesn't get there. This one does get there day 1. This one gets there day 1. This one gets there. Fudge. That's pretty classic right there. 5 out of 10 times it gets at least the expected move. So it's kind of a coin flip. Not a bad trade. But now the question is, how much do I pay for it? So if I go to Spotify through the 7th or the 14th, I can go 250. I can go 250 strikes, which aren't bad. The 7th, 250 strikes aren't bad. I'm going to go out to the 14th on this one. Can Spotify? I'm planning on a move around $65. Market makers looking at about $63 for next week and looking at about $58 for this week. So I think if I did like $60, maybe let's see what $50 prices out to be. So if I go to the upside at 5, let's go 600. So 600, if I buy the 600, it's going to cost me 57 cents to make $1.93. Like the risk reward on this is fantastic. And I'm only going up $50 instead of the calculated 60 plus dollars. So I think that's reasonable. I mean, now I have like a bid ask that doesn't exist. That's interesting. So 55 cents there, 58 cents there. I don't know why that costs more. This one might not get me filled the way I want. So I'll try 55 cents in this one. I'm going up about $50. And this one I'm going to go down to 500. There's no, this can't be right. This bid ask is going to be really, really wide. I'll try it. I mean, I'm willing to get filled here for like $1, even up to like $1.25, because the way this trade works is if price is greater than 602.50 or price is less than 500, I'm going to make $2.50 on this trade. Now, granted, I'm going out a couple of weeks here, so this one might not be as awesome. But as long as I'm not paying over like $1.20, $1.25, look, I can take a full loss on one of them, right? So if I lose on one and I lose, let's say, 60 cents, if I can draw that. So if I lose 60 cents and on the other one, I'm paying 60 cents. So I pay 60 cents, but I close that one out for $2.50. So it gives me $1.90 net, and I lose the full 60 cents here. I walk away with at least $1.30 or so. So, I mean, net profit wise, this mechanically looks pretty good. What do we need to see? We need to see price going, one way or the other directionally. So a little bit of follow through would help. Immediate follow through on Spotify would be fine. But the question is, are we getting above 600 or are we getting below 500? Well, given where we're at right now, I mean, expecting about a $60+ move, either this thing blows up to all-time highs or starts to give a lot back because the stock is stretched quite a bit. So let's find out. I think I like this trade. I'm willing to take this trade up to not this much. That's way too expensive. If I can get this one filled for like $1.20, I might have to go one strike out a little bit farther out. 605, 602. That one might be a little bit better. Expected move. Expected move. I don't know. I'm going to try to get filled for $1. I don't know if I'm going to get this one taken in or not. Let's find out. All right. $1.10. All right. Max fill is going to be $1.25. Go $1.20. $1.20 not filling. $1.25 is final offer. If I don't get it filled, then I'm not going to take the trade. $1.25 not filling. All right. So Spotify, not good enough. If I want to do something a little wild and crazy with the expensive side, then I can buy the 550, buy the 475, and then sell my wings. I'm trying to think. If I sell like the 610, so I'm going up $60, and then the 547, I'll sell the 500. The 547. Is that right? So 610, and then I go down to like 490. Okay, so here's what I don't want to do. I don't want to pay $4,000 for a trade that, it can make me $2,000, right? Like if we get a big move, sure, I can make a couple $1,000s here. That's awesome, but I'm not going to front $4,000 on this trade, especially if price doesn't move enough. So I think it's better off to not take the trade, which is unfortunate because I want to see, hypothetically, do we get above? So is it greater than 600 or is it less than 500? Because if we are greater than 600 or less than 500, I can make money on the trade. The problem is I'm not getting the spread or the mid price to fill where I want. So I might finesse this one a little bit more and see if I can find a trade. But for at least the spot check, I'm going to say no on that one. Let's go to Ferrari. So this would be race, ticker race, trading at 426. Average move around 7%, 4, 3, 3, 3, 4, 4, 4, 5, 6, and 7. Conservatively, I would say like a 4% move. 4% on a 426 stock. That's a $17 move. IV is 83. It's like, okay, so here's the good thing. IV is really high, but the bad thing is this only has monthly expirations. It's not a terrible thing, but here's what's going to make me say no to the trade. The strikes are $10 wide. There's no way this trade works. Okay, so I'd be putting up way too much capital, or just I don't have the precision that I want in the options chain. These strike prices are way too wide. So it's a no. Let's go to AMD, which is Advanced Micro Devices, trading at 73.7 IV. That's again quite high. Let's take a look at the stock here. AMD trading at 114, sitting. I'd say this is a pretty critical spot. Either we're bouncing hard off the 200 moving average or we're breaking below it. Let's see if the mechanics look okay for it. AMD. We're looking at about a 9% average. 7, 8, 9, 9, 9, 10, 8, 8, 8, 9, and 9. I'll go 9%. 0.09. Stock is trading at 114, looking at about a $10 move. IV is nice and high. AMD is after close on Tuesday, so I either go out to the 7th for a big reaction. Okay, so the 7th, what am I looking at for price movement? About a $10 move. Market makers show about a $10 move. We're trading at 114. So if I do the 123 by 24, okay, we get a $10 move. I only have to pay 23 cents to get $77. That's not too bad. And then a 104. If I buy the 105, sell the 104. Same thing, similar mechanics as PayPal. Okay, so I'll toss this in here, 45 cents perhaps. See if I can get filled for 45 cents. 47, 48. As long as it's under 50 cents, I'm okay with the trade. Got filled for 48 cents. Okay, so this is AMD earnings. If we're greater than 124 or less than 104 for a dollar credit. Okay, so AMD, I'm looking at greater than 124 or less than 104. So we'll box this one in. So 124 to 104 there. That's the trade. So I'm buying the 123 call, selling the 124, buying the 105 put, selling the 104. We're looking to see if it gets through the market maker's expected move of around $10. That's about what I calculated. How many times do we get to a 9% mover? Probably should have done this before I push, enter on the trade. But as long as we get to 9%, hopefully this is a good enough trade for the week. So we get there. We get to 8.87, not quite 9, so that one technically doesn't count. Doesn't count. Doesn't count. This one gets there. This one gets there. This one gets there. Okay, so we're 4 off, fudge. Well, we'll see. I already took the trade, but I'm 4 out of 10 times it gets to the 9% handle, and this shows. I don't know if we get a better than expected move. I mean, semiconductors, I would hope, are sensitive enough that we're going to see some volatility on it, and that's what I need. But worst case scenario is if I lose on the trade, I lose, 40. What I get filled at? 48 cents, 46 cents. Get filled for 48 cents. Okay. So let me highlight that one. So that is for AMD. Okay, let's go to Google. So another drip of Mag 7 into the markets. We're up to fresh highs on Google. I got a lot of income trades here. Let me go to the daily time frame. A lot of income trades way out of the way. Google probably going to have fine earnings. I don't know if it's going to be a big mover or not. You know, it's been kind of priced out perfections. A lot of the Mag 7s have been. Average move is around 8%. I'd say that's even on the higher side. We've got 7 and change, 8, just under 7, 6 and change, 6, 6. Yeah, I'd say like a 6 or 7% is going to be a better average than 8. So I would say even 6.5% times a 202.68. That's a $13 move on Google. I don't know if that's going to be good enough. 250 wide for a move that's going to be about 13 bucks. I'm going to pass on Google. You don't get the. I'm just not getting enough precision on the strikes that I want, so I'm going to say no to that. Snap, I've already got some exposure on this one. Snap is up at 11.23. I've got some naked puts on this one. If Snap has positive earnings, which I hope that it does, then I can just collect the income. But if it goes lower, I potentially have the assignment. I'm going to use that as a repair trade. 1, 2, 3, 4. That would be 400 shares at around $11. Okay, I'm going to try to repair Snap if I get assigned on it. If we get above, set this at 12 bucks. So if it gets above 12, then that's above all my strikes, which is fine. If it pushes lower, then I'm going to take some assignment and try to repair this for a few $100 bucks. So I do have some exposure there. I'm not going to take an earnings trade on Snap, but I have exposure on it. CMG is Chipotle. Chipotle trading at 58. I got a bunch of ratio spreads and naked puts on CMG. And the IV's high on a lot of these. This is pretty good. CMG. 7%, 8, 9, 8, 11, 9, 9, 10, 8, 7. 7 seems fair. $58 though. It doesn't make it super exciting for a $4 move. Probably not stoked about this trade. So it's not super expensive. $58. Can we go, $4? I'm sure we can. Can we get up to highs again at 66? Well, that'd be an $8 move. We come down to lows. That's a $10 move. So if the price has any interest in coming to this level, maybe taking a directional play on Chipotle. But again, how many times can we get to at least a 7% move? Check this, and then I think I'll wrap it up here and let you go. So how many times can we get to at least a 7% move? So let's go 8 days out. We get there. We do not. We get there. 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 Close. We get there day 8, but that's not good enough, but that's pretty good. So consistently getting to 7%, that's a good sign for Chipotle. Now the question is, what do the option chains look like? Chipotle is going to be a Tuesday after close. If we get an immediate reaction, I need a $7 move. So if I buy the 58, and I sell, let's go 10 out, I get nothing for it. If I sell 7, that'd be 65, 51. So I can pay $374 for what should be, I pay $374 for what should be a $4 move. What? That's awful. I mean, I can still make profit out of that, but man, that's a bummer. I could go a little bit tighter, pay 58 to 53, 58 to 63, 324 to make 5, like fudge it. That's just not good. Not good equity management. I'm not going to take that trade. If I go 1 strike out of the money, sell 5 wide, pay $250 to make $5, like that's a little bit better. That's a little bit better. That's a little bit better. Do I love the trade? Well, if we are only going for about $4, I'm paying $258 for about a 378 move. I mean, I can still turn this into profit. That's the good thing. I'm going to take this trade. So for hopefully two, I doubt I'm going to fill less than the mid, but I'll find out. All right, hopefully 260 or less. I can make $5 on the trade. Let's go 260 here. Oh, you piece of crap. 261. Okay, 265 is my final offer. If I can't get filled, I'm not going to take the trade. 264. I mean, okay, it's got filled at 264. So this is a CMG earnings. I'm doing a 59 and 57. Then I'm selling the 64 and the 52. So $2.64 debit. And I'm going to try to close at 4. Well, anything. I mean, $5 is max profit, but realistically, if I can turn 264 into, 364, I'd be okay taking profit on that. So CMG, I'm looking at the 59 by 64 bull call spread and the 57 by 52 bear put spread for 264 debit. Okay, so that trade is in. So Chipotle, got some interest in that one. That should wrap me up through Tuesday. Wednesday, Uber, not bad. I'll probably look at Uber. Aflac maybe for some insurance. Eli Lilly should be pretty volatile if I could price that one out. So there's some more earnings trades I'll look at this week. All right, but I'll wrap it up here. I got to start a class in about 15 minutes, so I'll let you go. And hopefully that helps. So I'll get in PayPal, AMD, Snap, and Chipotle, add that in. I'll put that in the Pulver alerts. And I will see you back here tomorrow. Okay. Thanks, everybody. Have a good day. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.